In today's video, we're going to discuss how to increase our income even further from current levels, over 100,000 per year in dividends, using Coinbase and CONY. Coinbase is a Cathie Wood's ARK fund holding that I'm trying to get more exposure to because we have OARK, and OARK covers ARK, and one of the largest holdings of ARK is Coinbase. So really quickly to show you my performance, we're up 16% for the year. The Dow's down 0.16. The Nasdaq's up 23, and the S&P is up 9%. So we're beating the S&P using our dividend-based approach. So we're going to add to our dividends of over 100,000 per year buying Coinbase. I know it's not my favorite type of play. It doesn't have a dividend. It has 100% maintenance, but we're trying to get more exposure to the ARK funds, ARKK, and tech, because as you could see by those performance stats that tech is outperforming value and the S&P. So we're trying to get more tech exposure, but without chasing tech, because you don't want to just reach out there and chase high beta names that could come crashing down on you. So we're buying a little bit of COINY because, well, COINY hasn't come out yet, which just like AMSI, we made a video yesterday on AMSI. AMSI has not come out yet, but when it comes out, we're going to be ready by buying Amazon first. So when Coinbase comes out, when COINY comes out, we're going to be ready by buying Coinbase, because you can't just sell covered call on such highly volatile names like a Coinbase. You might get the high premiums, but you're not going to get the upside potential because upside is capped in covered call funds. So we're going to buy 500 of Coinbase only because it sucks up a lot of equity. So it's 100% maintenance, okay? Coinbase is 100% maintenance. Hopefully COINY is 50% maintenance. For all of you who don't know what I mean about maintenance, for every $1,000 I put into a stock, $500 is taken up with 50% maintenance. So if I have 109,000 available for withdrawal and I buy 1,000 of Coinbase, 500 in this case, then 500 of that is going to drop one for one. So this is the key with using margin. As you know, I use a little bit of margin here, this extra purchasing power, this 545,000 times 4 purchasing power. For every $1 you put in your account, you get $4 of purchasing power. So I use a little bit of this number, this purchasing power, which you see here at the bottom, this negative 257,000 in debt. I use a little bit of this debt, which has a low interest rate, lower than credit cards. So why not live out of this debt to get extra income? So I use the debt to get extra income, but you don't need margin to get the extra income. You could just buy Coinbase or COINY or any of these other funds. Now let's get back to the subject at hand. And by the way, if you need help with margin, email me for e-guides at akintodd48@gmail.com. It's 100 for all 4 e-guides, $50 for each e-guide, 100 for all 4 while my channel starts out. I think that's a good value. These are not books that you would pay $10 or $20 for. These are e-guides. These are almost courses. Plus you get my number. So it's a course and you get to talk to me anytime. And I truly believe that this course would change your life because it has changed my life. This isn't like other YouTube channels where they sell courses and things that just I don't really think would give you any value. This has actually changed my life. When I talk about Cornerstone drips, which is one e-guide that I have, Cornerstone, look at these drips, 671, 654, okay, 15% profit, 18% profit versus the market value, the market price of $7. So to me, this was life-changing. The drip of Cornerstone, learning how to play Cornerstone. Yeah, I want to put all my money in Cornerstone, $400,000 to be exact. As you can see over here by this column, 200 each in each name because they're 4-star funds, but you have to know how to play the rights offering right. If you look at a chart of Cornerstone, it goes into the ground, and that's because you have to learn how to play it during the rights offerings, and I have e-guides on that. So it's an extreme benefit to have me coach you through that. I mean, you could do it on your own. You could watch my videos and learn on your own. That's perfectly fine. And if I charge $30 for an e-course that's supposed to change your life, or an e-guide, I would think that there's something suspicious about that e-guide or that course. $30 for a course that's going to change your life. So I think 50 is actually really cheap. We're going to do 100 for each guide, but I'm just starting out. So I'm doing 50 for each guide. Okay, back to the subject at hand. So Cornerstone, that's how I play that. Rights offerings and drift, that's how I get my performance up and my monthly income up to such a high number. OARK, we want more tech exposure through ARK. So we sold puts on ARK on Friday to lower our margin. We got $1,400 for selling a put on ARK, and this is going to give us extra performance for OARK because OARK's upside is going to be capped. So I want more tech exposure, more OARC exposure, more ARK exposure. So I'm going to buy Coinbase because, again, the CONY fund is coming out soon. And if the COINY fund is coming out, you see here below, see first it was Appley, then AMSI. So I'm thinking the Berkshire Hathaway fund is going to come after AMSI, and then it's going to be COINY. So if COINY is coming out truly, and I'm going to buy at least 1,000 or two of that fund because I want the extra income per month. I like high dividends at this channel. Then you have to buy a little stock too, because the stock will help offset that sideways decay, that upside that's capped in the covered call fund. So Coinbase, gonna buy 500. Remember how it's gonna suck up 500 of my equity because it's 100% maintenance, 100% maintenance. Okay, so not good. We're only gonna keep 500 in it. The market is up right now on this debt ceiling issue. We always knew that would get resolved. So I was never worried about the debt issue. We've been buying this market all the way from the bottom for over a year now. We've been making tons of videos on it. Coinbase, $500 preview. Coinbase, it's up 4%, but look at it where it was off the highest place. Okay, $500. Now, if you go into my available withdrawal now, you'll see that 109.9 went from 109.9 to 109.4. So that took up 500 of my purchasing power. That's not good when you're running margin. If you're not playing in margin, that's fine. Don't worry about purchasing power. But I like to use a little bit of that margin, as I've told you, to get more income, because how else can you live financially free? Yes, you can live off these dividends, and the dividends will definitely help you live financially free. They'll constitute as qualifying income to banks, unlike trading stocks. Trading stocks do not provide qualifying income to banks because they're up and down. Those gains are too unpredictable. You need dividends or a pay stub from a job. So these dividend paying funds are going to help you get to financial freedom, but the margin helps you get there faster. I'm not advocating it. That's just what I do. And again, if you need help with margin, email me for those e-guides. And if you need help with Cornerstone, how to play the rights offering, email me for that e-guide. Look at ARK really fast, how large the holdings are for ARK. The percentage that Coinbase is in that fund is about 6%. It looks like here. Coinbase, 6% of the percentage of net assets, 6%. So that's a substantial weighting in the ARK fund. So that's how we're going to get more ARK exposure. Plus you get Bitcoin exposure. You don't get any FOMO from that. Last thing I want to show you is just the chart of Coinbase. It was in the 300s. Okay, now it's in the 50s. And it just got an upgrade today on CNBC. I was listening. Some upgrades came in. It's the premier platform to exchange crypto on, and this is going to be the one that survives, many people think. So I'm not believing in Coinbase. It's just when you have crypto in your account, it should be less than 5% of your portfolio. That's what I have. Crypto does not represent more than about 1 or 2% of my portfolio because I sold puts on Riot and Mara, as you've seen on past videos, for high premiums. So as long as we keep the position size small for Coinbase, then we won't suck up too much equity. And then we'll wait for COINY to come out, which will give us that extra income on top of the capital gains growth from Coinbase. And if Coinbase goes lower, then we only had $500 in it, no big deal. And we're just going to track the ARK ETF anyway. That's what we wanted to do. And if and also if it goes lower, then the dividends from COINY pay back all losses from Coinbase. If we go higher, then Coinbase wins and COINY wins. We collect the dividends and get cap gains, the best of both worlds. So anyway, I hope you enjoyed the video. Leave comments in the section below if you have any questions on how I'm playing these Yieldmax funds, and I'll talk to you soon. Thanks.